Hello everyone, welcome to another video. Now in this video, we're going to be talking about zero drawdown mastery. Okay, so I'm going to teach you guys a little something about structural inducement, which I don't see a lot of people talking about. But after this video, you can bet your bottom dollar that they're going to say they created it. When in fact, there was no creation, but it's more of a discovery. I gotta give that. I gotta let you guys just know that this is more of a discovery, not a creation. Okay, you can't create shit like this. It is there. I saw it. I coined it. It is now being taught to you. If anyone claims that it is theirs, they are basically talking bullshit. Okay, as you guys all know, I created everything. Whatever I create, I tell you I create. Whatever I didn't create, I tell you I discovered. Okay, so let's take a look at how to master zero drawdown. All right. Now, first of all, zero drawdown, right, is possible. Okay. It is not something that I use, but it is indeed possible. Okay. And I'll show you how. Number one, you need to have the knowledge of where you are going to keep your stop loss. So effective risk management is important. Okay. So you need to know where you're going to keep your stop loss. Number two, you need to know where you are going to exit, which I will show you how. And number three, you need to analyze price to prevent unnecessary fake outs. That's the gist of it, right? You need to be able to analyze price to prevent unnecessary fake outs and basically pick the POI that you need to be using. So by understanding structural inducements the way I teach it, you will be able to pick out these POIs that you really need to take trades as and when they're about to unfold. Okay, that is very important. All right. Now, just to give you a brief introduction, I'm going to show you a lot of chart examples on TradingView, but just to give you a basic breakdown of this, right? When you have a structural break, okay, and a candle goes like this, right? Another candle goes like this, right? Price will do one of two things. It will hit this candle, induce, and then go down, or it will hit that candle, induce, and then go down. Okay. Likewise, when it breaks up, it will either induce this one and go up, or it'll induce the other one and go up. Okay. That is the most awesome, the most best possible freaking God level inducement that there is. Now, the second one is like a last line of defense sort of a thing, whereby you have a range, right? This is the high, this is the low, this is the 50%, right? Liquidity at the 50%. Now, if price is not finding it enough to reverse from here or reverse from here, it will go and reverse from there. Okay. Now you will find that is because price comes and hits a key level over here. Now, when it hits a key level down there, this inducement becomes impossible. Yes, you will get maybe a reaction and then price will reverse for the 50%. Why? Because maybe around here, there's going to be another key level that will allow price to go down in line with your daily bias. Okay. So stop loss placement. Right, so we will go into structural inducement theory and practicals on the chart, right? I just gave you a bit of an introduction. So this is the inducement. This is where you'll be entering, okay? Your stop loss is going to be above the next candle. Simple, or above or below, okay? Stop loss is going to be above or below the next candle. To be a bit safe, you can double the stop loss a bit just to, in case you're wrong, you can keep your stop loss somewhere here. That's fine, all right? And your take profit is essentially going to be using my manipulated range, where you are going to be targeting 3 standard deviations. This works like a charm. Okay, 3 standard deviations, you are going to be using that as your exit strategy. Now, let's take a look at this. The comprehensive market analysis skills requires you to understand two things. Structure, the candle that breaks structure tells you a story. Okay, and also untapped liquidity pools, the liquidity that exists at certain valuations act as a second line of defense or a last line of defense in times of low liquidity. All right, so here is the 50% of this candle. If this reaction wasn't enough, it will come one more time and then go up. Okay, so over this in this example, these two candles over here, they are a fractal structural point, and when price breaks, we can see that this candle here, this fella here, was also responsible for breaking. It was this candle. Both of these candles provided liquidity to that structural break. So remember, let's just say it's something like this. Okay, both provided liquidity to this. The price can hit the first one and go up, or price can hit the second one and go up. Here it hit the first one and price went up. So your stop loss, if you're buying here, your stop loss is going to be here, or in case it has to come down here also, your stop loss is going to be here. All right, so this is going to be once, if it goes down, you're going to hit stop loss here. It's okay, you buy stop loss here, you have a better risk to reward now. So that's my -1 hour in case you lose, followed by a, let's say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11 or 12 hours. So a net gain of 10 hour plus for sure. Okay. So with that said, let's take a look at the charts so you can understand this a bit better. I'm going to keep it real quick, not going to take too much of your time. All right. So I'm in a Bitcoin buy right now, which is not going really, it's not going all that well, but let's see, right? So why I took this buy was because we had a buy projection right there for price to go up. It did go and hit liquidity targets, but I wanted to see whether it could go just a bit higher for my 3 standard deviations, but it looks like it is not really interested in doing that. But let's see how this unfolds. Okay, so let me take you guys through the structural inducement. Okay, now today you all saw I was in this gold cell, no problem. I was majority of my positions were out over here, right? So why did I do this, right? So I had 2 cells today on gold, right? I'm going to go through the cell. I'm also going to go through the Bitcoin buy, right? So here, what can we see? We can see that my initial sell today was here. Okay, full take profit was here. And my secondary sell was here. Full take profit was down there, but I closed it here. Not closed it, I took 80% off, and the remainder hit me at break even there. Right. So let's take a look at the first one. Okay, the one that happened over here. So we go to replay mode, and I want you to check this one thing, right? So when price took out this low there, right? Can you see that only this candle provided liquidity, meaning this high provided liquidity into this range? This candle did not. So why is this inducement working? Because if you check the highest time frame in which this happened, right, you will see that here you have one right there. Okay, can you see how it taps that high and goes down? So my sell was, of course, after I got some confirmation, but your sell based on this would be here. That's your zero drawdown. Okay, what you'll do is you go to the lower time frame, and you know that, okay, wow, this is my zero drawdown entry. My stop loss is above the next candle there, right? And so once you have that settled for you, you're going to do this. You're going to go up here. You're going to get your 3 standard deviations, and you're going to keep your TP here. Okay. Or what you can do is you can take this one, do that. You can keep your TP here with your partials coming off at 2 standard deviations over there. All right. So let's see how this trade fared. Yeah, perfect. Okay. Now, after this, what you can see is price went up one more time. So let's remove this, right? And check this out. Price went up one more time, and I also took part in that move. So how do we reconcile that? How do we see, okay, Sean, how did you take this? What is the structural inducement? Tell me how. Okay, we go here. We know that we have this 15-minute chart, right? We saw that we have all this going for us. Okay, now what I'll do is I can see that we have a structural break here. You see that? Okay, this candle was responsible, right? So if you go to the 30-minute chart, because I want to see the highest time frame in which, listen carefully, the highest time frame in which I saw that structural break, meaning which the swing point is available. 30-minute, this candle here. So this candle is going to be another point of inducement there, 30-minute chart. So I'll drop back down to the 5, and I see that, okay, that is my 30-minute inducement point, structural inducement. Okay. And then from there, what you can do is you can go to the lower time frame, find your confirmation, whatever it is that you need to see. and you can take a sell. So if you both just to take a sell based on the line here, you keep your stop loss there, right there. Okay. Now you're going to keep your stop loss there. All right. Now, after you keep your stop loss there, then you need to think to yourself, okay, what if price goes for the ultimate inducement point that we were looking at, which is this here, right? That's also a possibility. So I would usually wait for my confirmation. What I would do is I would simply do this. Okay, keep my stop loss above that, right? We'll go 15 pips. There. This is what I would do. You would do it like this. Or once you get your confirmation, then only you will take the trade. So let's say I keep it here, and I'm going to keep my same TP at this low, and let's see what happens. There we go. There we go. All right. That was another full TP, but my take profit was slightly lower than that. It's okay. It is what it is, right? So this is how I caught the gold sells today. It is as simple as that. Nothing too complicated, okay? It is as simple as that. Now, if you then take a look at why I took my Bitcoin buys, right? Why I took my Bitcoin buys is because of this. As you can see right here. All right, this is my Bitcoin buy. Why? Number one, you can't see the buy projection because of the feed issues. On Coinbase, you can see that there was a buy projection right here at 625, right? So meaning, I know that, okay, if it comes to a POI, it comes to everything that I need to see, I can take a buy. So why did I take it early? Here's why. See how with this blue line is a key level, right? See how there's a structural break here, okay? And see how this candle broke that high, therefore this low is the inducement. Okay. Okay. The short, it went a bit more lower than that. All right. Let's check the different time frames. 15-minute chart. What happened on the 15-minute chart? On the 15-minute chart, we can see there's nothing much. In fact, the structural break here, the candlestick structural break here. This is the candle that took it out. So this is the inducement that caused the buy. Cool. Now I'm interested in why price came down here. That's why, right? So what are we going to do? We check the different time frames. 30-minute chart already did its job. Okay. Well, 1 hour chart. On the 1 hour chart, what we have is this. We have this swing high there. This candle took it out. Therefore, this is the inducement. Okay. Now we know that this is the 1 hour inducement. What we'll do is we'll go to the 5-minute, and on the 5-minute chart, we can see that, okay, I want to find my confirmation on the lower time frame. And once I get my confirmation, I'm going to start buying. So here, down here, why did I buy really early? Right here. Even though I'm going to face a break even right now because my stops are at break even. Why am I going to face that issue? You get it? Why am I going to face that issue? I'm going to face that issue because number one, I bought early. So that means if that when you buy early or when you sell early, there's always that possibility that price is going to come back to your entry and then it's going to go your way. All right. So why did I buy over here? Let's take a look. I did not buy it based on the 5-minute. I saw this inducement. I went the one. You can see on the 5-minute chart, you can see on the right-hand side, bias is bullish. Therefore, I'm going to only select the buy projections, and then I'm going to focus on the entry model, right? So we'll go to the 1 minute to see why I bought. You can understand better, right? So on the 1-minute chart, what we can see is here, see this swing high there? This guy, this is a candle that broke structure. So that low is the trigger. See that? That low is a trigger. And look at that, perfection. That's why I got in. Okay. So what if I did not get in like that? What if I wanted the perfect entry? Then we go to the 5, right? Now we can see that here structural break happened. And we can see that with this structural break, we have this inducement. Okay, simple, done. And also we can see that there's that additional one over here, the one that provided liquidity. Take this also. You can see gave a reaction, but not enough. Now we hit that. Then we want to see, okay, are we going to get a buy from here to prolong the move that we were looking for, right? Because now when we think about what exactly it is that we need in terms of liquidity, in terms of where the potential high of the day can be, we have to understand that when you're looking at price like this, right, that from the point in which we change or which we shifted trend, which is around here, you can say that's your smart money reversal, yada yada yada. The left side of the curve, that's important, right? And when it comes to session-based trading, when it comes to trading in general, where is the most important liquidity pools? Where are the most important liquidity pools? They are going to be session highs and session lows, right? So, so basically, this here was yesterday's lunch hour high, which the Asian high took out today, right? So what is there that still remains open? This one, London close high. If it wants to go there, it'll go there. Otherwise, I'm dead wrong and it hits my break even. Or if I try to go again, it'll hit my stop. That's that. Okay. So that is how you use structural inducement. And that is how you can get your zero drawdown entries. That is how you can be patient to say that, okay, the move has not happened yet. I'm waiting for the move to happen. Once the move happens, I'll be good. And I will not have been stopped out prematurely or unnecessarily. Okay. So with that said, my annual boot camp is going to be in January. So if you guys are interested in my annual boot camp, I'm going to be uploading the information on Telegram. So make sure you join the Telegram group. The link is in the description down below. Trade Easy is also there. You can definitely get the algorithms. We have an active community. We're doing weekly calls, sharing trade ideas when we have the time, discussions when we have the time. All in all, it's a place where everyone can chill, everyone can make money together. Okay, so that's it. Good luck and good trading. Bye bye.